Green Climate Fund approves $170.9 million for 6 countries. ENI discovers oil well offshore Ghana. Egypt bids adieu to Ever Given and Suez Canal saga. Hello and welcome to Business Incorporated on Channels Television. I'm Imi John Mekwa. Well, let's start off with some major markets on the African continent. Sentiments were mixed at intraday. South Africa was trading in the green territory, adding over 1%, followed by Egypt in the same territory. Nigeria was down marginally, same percentage with Kenya, which closed Tuesday's trading down 0.02%. In the Middle East, most of the markets were downward at intraday. The biggest decliner was Saudi Arabia, down 0.47%, while Abu Dhabi lost 0.22% and Dubai lost marginally at intraday. Qatar was the only gainer, up almost 1%. The Pan-European Stock 600 climbed 0.6% in early trade, with basic resources adding 1.7% to lead gains as almost all sectors and major bosses entered positive territory. Well, let's take a look at the market at the middle of the week. Lots of stories in the pipeline, IPOs, M&A transactions, but Conrad has the details from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon. Thanks for having me back on Channels TV. Now we are going to talk about IPOs.
Yes. Well, what's the mood like? What's going on there? A whole lot is going on.
Well, we had a very strong half year in terms of IPOs here in Frankfurt, and the forecast is that the second half will also be strong. A couple of interesting companies in the pipeline. Daimler is expected to spin off its truck unit. Continental is expected to spin off its unit Vitesco, and Novem is expected to come to the market. That's a company that makes, you know, luxurious cars even more luxurious with the parts that Novem is producing. They are going to be coming to the market as well.
So from cutting-edge high-tech to the more traditional industries, engineering and machinery exports have long been the backbone of Europe's biggest economy. But Germany is no longer the world's leading exporter of machines and manufacturing equipment, according to a study by trade group VDMA. China's global market share came to 15.8% last year, slightly topping Germany's share of 15.5%. 10 years ago, Germany exported twice as much as the Asian competitor. What happened?
Well, Germany was overtaken by China. China already has been for quite a while the largest producer of machinery. You know, China produces more than the United States, Japan, Germany, Italy combined. So it was only a matter of time until China really would become the biggest exporter of machinery as well. The difference is not super big, 15.8% market share to 15.5%. Germany still is in a very, very strong position, but you're right. I mean, having lost this title of the world's export champion, that is something to nag on German manufacturers, German machinery makers, in particular. Some of those so-called hidden champions, smaller, medium-sized companies that are big in their relatively small markets.
And I'm sure China would not just fold their arms and wait for Germany to take over again. But German industrial production falls and markets await Federal Reserve minutes. What are the sectors stick out?
Well, you know, if you look at the sectors, I think there are two major trends that are again followed today. One is technology, SAP, Delivery Hero among the DAX companies which are most in demand. Next to them, Heidelberg Cement and Covestro, both companies profiting from a worldwide pickup in building, from a worldwide pickup in manufacturing. This is when you need cement, and this is when you need plastics. This is what Covestro is producing.
All right, thank you so much, Conrad, and enjoy the rest of your day. Well, we'll move over to the UK now, where Juliana is standing by. Hello, Juliana. Welcome to the show.
Good afternoon, Ine.
Yeah, so bar and food sales at the pub chain dropped 49% between the 12th of April and the 16th of May. How's the market at this time?
Okay, we're talking about Wetherspoons. Wetherspoons is Britain's biggest pub chain. They've got a pretty controversial CEO, Tim Martin, who is never one to hold back when it comes to giving out a tongue lashing to the government. They've just given a trade update, and it's pretty disappointing. As you said, their sales since the reopening of the pandemic has taken place have plummeted. And one of the reasons why is because they've had a long-standing policy of not showing any football matches in their pubs. Really bad time to do that because, in case you haven't noticed, England are in the semi-finals of the Euro 2020. Massive, 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 massive story. I can't repeat that here in the UK. Dominating headlines, but they haven't benefited from that because in their pubs they don't put the TVs on, and so they have shown that revenues have declined for the past 3 months. They insist that they are still very profitable, but also as well there was a campaign running during the pandemic asking people to boycott Wetherspoons. Again, Tim Martin is kind of running off the mouth there, talking about staff and having to sack people. And so some people are boycotting Wetherspoons. Unfortunately, their long-standing policy about not having tellies in their bars has come to haunt them, especially because there was a report by the Beer and Pub Association early today saying that over 9 million pints of beer are going to be sold across the UK today. 7 million pints of beer will be sold during the Euro 2020 match at Wembley. 60,000 fans. Sorry, I keep talking about the football, but it's a big story and it's a bit of business today. So massive, massive, massive boost for morale in the country. Also massive boost for the beer and pub groups. Of course, they've been in battle throughout the pandemic. So everybody's looking forward to this. In fact, some people are drinking at the moment, Inni.
I can see you can't be cut off with that. Well, analysis suggests that recent rise in employment will go into reverse over the next 6 months. What consideration gave rise to this?
Yeah, an interesting story. The OECD, obviously that Paris-backed economic organisation, they've been having a look at the 36 countries that are part of the OECD membership and looking at long-term employment and unemployment. At the moment, the stats here in the UK are pretty good. It shows that the labour market has kind of recovered from the pandemic. There were so many fears that unemployment could peak at 11%. That's not happened. Unemployment internationally and historically pretty low at 4.8%, but we are still, millions of people are still relying on the government's furlough scheme. So the government, of course, has subsidised.
Well, it looks like we're having
Governor
issues.
Andrew Bailey has already said at that point we are expecting to see a rise in unemployment, and there have been some concerns from some businesses who are struggling to hire that the skills are not really matching the candidates that are coming in front of them during interviews. So there's a lot of work to do. Britain aren't going to fare the worst when it comes to OECD and the labour market, but certainly their analysis and their report today gives food for thought. And before we go, I'll just run through those numbers at intraday. The FTSE All Share is up 0.59%, the FTSE 100 is up by 0.71%, and the FTSE 250, that domestic market, is up 0.44%. In currencies, the British pound is up against the US dollar by 0.11%, up against the euro by 0.11%, and up against the Japanese yen by 0.28%. I think it's only right that I wish the England team good luck, seeing as you're crossing over to me in London, and I did manage to put a bit of a business spin to that Wetherspoons story.
And you did a good job of it, Julian. All right, yeah, take care. So moving away from London now to Asia Pacific, where shares were mixed today following losses on Wall Street, with the S&P 500 ending its 7-day winning streak. Chinese electric car maker XPeng made its debut in Hong Kong today. Shares ended the trading day unchanged after rising nearly 2% in the early moments of trading. The broader Hang Seng index in the city slipped 0.4% to close at 27,000. 960.62. Mainland Chinese stocks closed higher, with the Shanghai Composite rising 0.66% to 3,553.72, while the Shenzhen Component advanced 1.85% to 14,940.05. In Japan, the Nikkei 225 dropped 0.96% to close at 28,366.95. Other topics index declined 0.86% to end the trading day at 1,937.68. South Korea's Kospi shed 0.6% on the day to 3,285.34. Over in Australia, the S&P AX 200 closed 0.9% higher at 7,326.90. MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.17%. And moving over to the United States now, stock futures traded in slightly positive territory this morning after the S&P 500 ended a 7-day winning streak, its longest since August. Dow Jones Industrial Average futures rose just 7 points. S&P 500 and Nasdaq 100 futures both traded in mildly positive territory. During the regular session on Tuesday, the 30-stock Dow fell 208.98 points, and the S&P ended the day down 0.2%. The Nasdaq Composite rose nearly 0.2%. The tech-heavy index rose to a fresh all-time high on Tuesday. Investors may be worried that the economy might be approaching its peak and that a correction could be on the way. In addition to complacency in the market, the combination of profit margin pressures, inflation fears, Fed tapering, and possible higher taxes could contribute to eventual drawdown. Oil prices steadied today after a steep drop in the previous session following the cancellation of talks among OPEC Plus producers that raised the prospect that the world's major crude exporters will turn on the taps to gain market share. Brent crude was up 3 cents at $74.56 a barrel after slumping more than 3% on Tuesday. U.S. oil was up 7 cents at $73.44 a barrel, having declined by more than 2% in the previous session. Divisions between Saudi Arabia, the biggest OPEC producer, and the United Arab Emirates, which oppose extending supply constraints designed to support prices after the fall in demand from the pandemic, were the main reason behind the failure of the discussions earlier slated for Monday. Nonetheless, the market is getting too tight for consumers, especially in the U.S., where oil is becoming uncomfortably expensive for consumers and industry. In the metals market, gold prices edged lower today after hitting a 3-week peak in the previous session as a rebound in the dollar weighed on the safe haven metal ahead of the release of minutes from the U.S. Federal Reserve's June policy meeting. Looking at the fundamentals now, spot gold was down 0.1% at $1,795.39 per ounce after hitting its highest since June 17 at $1,814.78. On Tuesday, U.S. gold futures edged 0.1% higher at $1,795.80 per ounce, making gold more expensive for holders of other currencies. The dollar index hovered near a 3-month high hit last week. Silver eased 0.2% to $26.08 per ounce. Palladium fell 0.5% and platinum slipped 0.6%. Well, after the break, we'll look at digitalization of trade in Africa. Do stay with us. It's Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Well, it's 6 months since the declaration of 2021 as African Continental Free Trade Area Year, AFCFTA, by reducing tariff and non-tariff barriers to intra-African trade. The initiative could boost regional export by 29% and income by 7% between 2020 and 2035. Analysts have said that AFCA's potential may not be fully realized without stronger digital connectivity and effective policies. Is Africa ready for this? 6 months after the declaration, where is the continent in maximizing this forum? The Chief Executive Officer of Web Fountain, Leon Sis, joins us now to share his thoughts. Hello, Mr. Sis. Thank you so much for joining us.
Good afternoon.
Can you hear me, Mr. Sis?
Sorry?
Okay, all right. So the AfCFTA is governed by online negotiating forum, digital payment system, among others. How effective is digital connectivity that should accelerate this on the continent at this time?
So basically, there's 5 instruments that govern the CTA. The first is the rule of origin. Then there's the online negotiation forum. You have the monitoring and elimination of non-tariff barriers, digital payment systems, and the African Trade Observatory. Basically, the digital connectivity can clearly support 3 of these instruments. First one is rule of origin. Concerning rules of origin, it's important that goods benefiting from the agreements were entirely or partially produced in Africa. It is important that goods arriving out of Africa, entering in a country, then sold to another African country do not benefit from any tax relief. So products originated in the continent should be clearly labeled made in Africa. So the digitalization of the rules of origin using technology such as blockchain or artificial intelligence to detect potential fraud will play a crucial role in creating confidence between the participating countries and administrations. Another of the instruments is dealing with digital payments. So digital payments is something that is quite important, I think. We have seen a lot of work has been done in this area, specifically during the COVID period. So the solution that will have to be proposed to the states is to be able to use high-tech means of payment, such as bank transfers, credit card payments, but also methods that are today commonly used by our people, such as mobile money, right? So mobile money is something that should be included in these services, and it will also be important to cater for the small businesses and allow a smooth transition from manual payments to the electronic payments, digitalization of payments, and this can be done using cash payments, but in a way allowing to secure and track the payments. So these are the areas I think that digitalization could play a major role.
All right, but majority of the businesses in this region are micro and small enterprises, and they have less capacity in terms of financing options and digital skills. How can this category of businesses adapt their business operations to compete in the regional and global markets?
Small and medium enterprises represent today 80% of Africa's business, which is huge. That's really quite important. So one of the main objectives of this, basically, CFTA is to increase, in fact, the way they can exchange and do trade between African countries. So one of the good things in COVID crisis is that it has accelerated the adoption of digital technology across the world. We find this everywhere, in fact. The lockdown restriction created a rare opportunity for many SMEs to engage with digital technologies, allowing businesses to stay operational, in fact, and access new markets. Unfortunately, given the enormous digital divide we witness in Africa, the benefits of this digitalization have been unevenly distributed. So only a few SMEs today are capable of navigating and integrating into digital platforms. This is where we can, private sector can definitely play a role. While adopting solutions like single window platforms or digital payments, basically, in one pattern, we provide what we call internet cafes, for example. Internet cafes are basically places where we provide computers, printers, scanning machine to the trade, basically, and we support them so that they can process their IT business while we are around them and helping them to go through the process. This is an important step so that SMEs and as well the informal sector will be able to play a role in this new IT technology. So this is something as well, we do what we set up these systems and we try to work with them very closely. And of course, when we set up such programs, digitalizing programs, which we do a lot, we do a lot of capacity building and training. We have huge programs in various countries working with not only the private sector, but also with government authorities that need to be really supported.
So when you talk of these steps that should be taken, the private and the public, what urgent steps should nations be taking, nations on the region be taking at this time to maximize the potentials of AFCFTA?
Yeah. I think digitalization is something that is important, but there's a lot of other things that we should look at. Today we have a lot of challenges to implement this intra-African trade. We have things such as border closures, travel bans, protectionism, and this is something we should have to move away from. So a lot of initiatives, I think, have already started in Africa, and I think this should be praised. I think the Nigerian government, for example, set up a committee. I think it's the National Action Committee, was set up by the President Buhari some years ago. And this committee is comprised by representatives, ministries, regulatory agencies, departments, but as well selected stakeholders, groups from the private sector and the civil society in order to coordinate the CFTA readiness. So this is really, I think it's an important step. Basically, we are putting everybody together, all the minds, private and government, to see how things can move forward. And I think it's a very good initiative. But in addition to digitalization, there's things that we should look at. I think the implementation of economic policies to attract investors, this is really important. We should start investing, having in industries, more industries in Africa. We need to promote the ease of doing business. So setting up solutions like single window solutions, computerizing customs and so on. We should provide tax reliefs, especially for the SME.
All right, Mr.
And
Sis,
of course, movement of goods. Movement of goods is something important.
This is obviously an ongoing conversation. I mean, when we talk of FCA, the angles are very, very much. Thank you so much for joining us this afternoon and sharing your thoughts with us on how to maximize the AFCFTA forum at this time. Mr. Alioune Sis is the Chief Executive Officer of Web Fountain, and he joined us from the United Arab Emirates. So moving on now, the board of the Green Climate Fund has approved $170.9 million in financing for the African Development Bank's Leveraging Energy Access Finance Framework, LEAF. With LEAF aims to unlock commercial and local currency financing for decentralized renewable energy projects in 6 program countries. They are Ghana, Guinea, Ethiopia, Kenya, Nigeria, and Tunisia. The Green Climate Fund's financing is part of an overall $900 million program budget, which objective is to scale up rollout of mini-grids, solar home systems, and commercial and industrial solar solutions in the program country. Moving on to Ghana now, ENI has announced a significant oil discovery in CTP Block 4 offshore Ghana. Preliminary estimates place the potential of the Iban Akoma complex between 500 and 700 million barrels of oil equivalent in place. The Iban 1X well is the second well drilled in CTP Block 4 following the Akoma discovery. The production testing data show a well-deliverable potential estimated 5,000, similar to the wells already in production from Sankofa field. Well, that's how much we can take on the program today. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.